Futures tied to the Dow Jones Industrial Average sat near flat Thursday night following the index's worst session in over a year. Investors also awaited key labor data due Friday morning. Dow futures added 43 points, or 0.1%. S&P 500 futures and Nasdaq 100 futures each rose about 0.2%. Those moves follow a sell-off on Wall Street during Thursday's session. The Dow tumbled about 530 points, or 1.35%, marking its biggest daily drop since March 2023 and its fourth consecutive losing session. The S&P 500 and Nasdaq Composite tumbled 1.23% and 1.4%, respectively. The three major averages swung into the red in the afternoon as crude oil jumped and Minneapolis Federal Reserve President Neel Kashkari questioned if interest rates should come down amid sticky inflation. The Dow has led the three major indexes down this week, pacing for a loss of 3% and its worst weekly performance since March 2023. The S&P 500 and Nasdaq have each slid around 2% through Thursday's close. Those moves mark a retreat after the strong first quarter concluded last week, leading some market participants to wonder if a correction is warranted following big gains. Near term, equities are likely subject to some consolidation following robust first quarter returns, said Terry Sandven, chief equity strategist at U.S. Bank Wealth Management. A modest pullback would be within the normal ebb and flow of an upward trending market. Investors will watch for the all-important jobs data coming Friday morning. Economists polled by Dow Jones anticipate non-farm payrolls growing by 200,000 jobs and the unemployment rate ticking down to 3.8% in March. Average hourly wages, another closely followed metric, are expected to rise by 0.3% on the month and 4.1% from a year prior. The market remains highly sensitive to any indication that the data-dependent Fed may need to curtail a rate-easing cycle this year, said Quincy Krosby, LPL Financial's global chief strategist, citing Kashkari's Thursday comments. Accordingly, the payroll report will provide important inflation-related data, particularly with regard to the pace of wages. Investor optimism over the outlook dipped in the latest weekly poll from the American Association of Individual Investors, while still remaining above its historical average for a 22nd consecutive week, coinciding with the start of the current bull market. Bullishness fell to 47.3% from 50.0% last week, against an historical average of 37.5%. Bearishness about the outlook for stock prices stayed below its historical average for a 22nd week, easing to 22.24% from 22.4% last week versus an historical average of 31%. Neutral sentiment climbed to 30.5% from 27.6%, the eighth time in 10 weeks it was below its historical average of 31.5%. Sentiment indicators are used as a contrarian signal. When bullish readings get too extreme, it's regarded as a sign that optimists have finished most of their buying and little money remains on the sidelines to come into the market.